Thanks for joining us. I'm Marlin Bohling with you, your tour guide to the ag commodities, and I have a co-pilot with me. It happens to be Chris Swift. He is with Swift Trading Incorporated right here in Nashville. How are you?
I'm doing great. How about yourself this morning?
I'm doing good. Thanks for coming in.
Yes, sir.
Let's dive into this grain market first. A little weak in the knees here today, so let's go take a look. All right, here's what we have. September corn is softening up to $4.47 now, and that is down 7 1/4 cents. From where we closed on Friday. That's already 13 cents off of our overnight high. December down 6 at 4.53 1/4. Now we have actually been a couple of pennies lower than where we are right now, so there is that. If you look at the soybean trade, now you have the August contract down 9 1/2 at 903 3/4, and you have September down 9 1/4. New crop November soybeans down 9 at 922 1/2. Chris, I again noticed we did not have any overnight export sales.
Right. No.
Getting to be too much of that.
Yeah, it may be. We've got right now the next probably 3 or 4 weeks where not much can happen to the crop. It's just in a growing phase right now. So I don't really look for a great deal of price movement here in the next 2 or 3 weeks. Maybe a little bit softer.
Until the August report?
Until the August report, and then we start to see where the discrepancies between USDA and private forecasters begin to mesh a little bit, hopefully.
So how do you handle this from a marketing perspective? You're a producer out there. You have corn or soybeans. You may have some in the bin yet, or maybe you haven't locked anything in yet for new crop. What do you do with this?
There's a couple of things you can do. You can always go and just buy put options. Just set yourself a minimum sale price to it. Allow the basis to come to you. You've already got the price fixed with the put option minus the premium. So if you go in there and maybe things get a little bit worse, deteriorate some, barge traffic begins to slow a little bit, and the South needs a little bit more grain down there, bases tighten, you get to take advantage of that. Instead of just the price movement of it. But at least that way, if there were to be a big surprise in August or September, we know that it's going to be another 12 to 13 months before you get the next crop in. So it's going to be some long-term trading here rather than just 1 or 2 days to see if the crop's made and then that's it.
I know there's probably still a fair amount of confusion out there about how these options work, but when you talk about a put option, it's like an insurance premium for if you want a selling price. If you want to sell something, you can buy a put, which will lock in a certain strike price level, whatever you want to pick, whatever price, and you pay like an insurance premium. So you just have to just figure you will probably lose that premium. And most analysts tell me that you're better off if you do lose it.
Well, you do, because you want the price to go up. That's exactly what you're doing. You're just protecting in case it goes down. But a put option gives the buyer the right, but not the obligation, to sell corn at that specific price and the strike price.
Exactly. And the call is just the opposite.
Exactly right.
If you want to buy. Okay, let's take a look at our wheat. And on the wheat trade right now in Chicago, first of all, we're down 8 1/2 cents. September quoted at 514 1/2 now. That's only 1 tick from our low of the day there, Chris. That's off of its earlier high by 17 cents already. The earlier high from overnight, I should say. In the Kansas City market right now, you have that September contract down 8 3/4 at 458 1/2. That's on the low of the day. And on the Minneapolis trade, we're lower there too. Currently, we have Minneapolis trading in the realm of 9 to 10 cents lower. September, though, is down 7 3/4 right now, 533 1/2. We will come back in just a moment, and we'll take a look at what's going on in our livestock trade. We are talking with Chris Swift, this guy right here, and we'll have more when we come back. We're talking with Chris Swift of Swift Trading Incorporated in Nashville. He's in the studio talking with us right now. And Chris, as we take a look at our livestock trade, I want to bring up live cattle first. Get your thought on what we're seeing taking place here. We had live cattle higher on Friday as we headed home for the weekend, but the August live cattle down 27. We're now at 108.20, only 1 tick from our low of the day here. What is this? All the ag commodities getting weak in the knees here as you come in the building. What happened there? October down 57 at 109.40. And let's move on to the feeder cattle trade. And the feeders are lower, even though the corn market is getting trounced today. We have August feeders down 25 at 141.35. That's interesting. And we have September down 23 at 142.32. In our quest to find a plus sign, let's go to the lean hogs and see if there's one there. Well, how about that? There is. All across the board, we're a little higher. August up 50 cents at 81.15, and even that's off of its earlier high this morning by 60 cents now. October up 83, and December is $1.38 higher at 71.83, and that one is resting on the high of the day, although that may not have traded here in the last few minutes. All right, what's going on with this cattle market first?
Not too much in the fat cattle market. I didn't see too much cash trade that took place this past week, and there hasn't been a great deal to take place in the cattle market. We saw the last couple of weeks where feeder markets moved up just a little bit. There's some empty pens out there, and they want to be replenished, and it takes an extra penny or two to pull them off a pasture right now. So we saw a nice little, about an $11 rally in the futures and about a $6 rally in the index. And after that, it may settle back down again because, in all honesty, without the fat market going up and corn going down, they just crushed the margins against them.
Okay, Friday we had the feeder cattle going down over $1. And most analysts were saying, that's corn. It's corn. Corn rallying, feeders are going in the tank. Well, corn's lower today, and the feeders are down anyway. That kind of eliminates that argument there a little bit.
Day in, day out, it's hard to time directly together on that. It makes for an easy story to tell. You know, oh, yeah, one's up, one's down, so that's easy. But in all honesty, they're not a day-by-day correlated item. Just because corn's down today doesn't necessarily mean you'd pay a higher price for feeders.
Okay, what about on the hogs, where you have the hogs higher today? Now, last week, when we wrapped up the week, a lot of analysts said, well, the cattle market's looking pretty impressive on the charts. What about hogs?
Hogs hadn't looked anything impressive. They're still in a bear market. They continue to push lower and well under the index now. The index was a little higher this morning, I noted, but we still don't have any Chinese demand. And until we have that Chinese demand to absorb some of this excess we got, it's going to be pretty tough to rally.
And I had brought up the topic earlier this morning. When you have the wholesale beef trade continuing to go down almost each and every day here for the past week and a half, it's going to be kind of hard to push that futures market up until that turns around.
Oh, it does.
Yeah, do you see that happening anytime soon now?
Not really. There tends to be a lot of margin in the retail sector and in the packing sector, and I think the production side would like to have some of that margin, but somebody's going to have to give it up in order for them to gain it. It's not going to come to them naturally, and I don't see the retail side nor the packer side saying, yeah, we'll be glad to share our margins with you right now. So,
even though grilling weather is improving.
It is improving.
All right. Well, I'm glad you came in. Thank you so
sir.
much.
Appreciate it,
as always. Chris Swift of Swift Trading Incorporated in Nashville. There you go.
Thank you very much, Chris. Always good to have you here.
Absolutely,
Thank you.
John.
You bet.